the history of how Bitcoin might integrate into the financial system goes back to early days. Then we have to look at the adoption of Bitcoin by MSTR in 2020, right? So Saylor, I think, was uniquely positioned to one, adopt kind of the Bitcoiner worldview. I think that he was already had a lot of overlap with that worldview, and two, having an operating company that would be able to accumulate material amounts of Bitcoin and be publicly traded. Now, when Saylor started buying Bitcoin, and MSTR, was kind of adopting it as a treasury reserve asset, it didn't. It seems like he didn't really have plans to leverage up, right, and to borrow against those Bitcoin in order to buy more Bitcoin. But that opportunity came about kind of organically, as you would expect. MSTR's stock price started to have a relationship with the Bitcoin price, and a volatile one. And so when you have volatility, that means that it can become very interesting for a public company to issue what are called convertible bonds, that are this equity-like debt instrument that is very appealing to Wall Street. And they were able to buy more Bitcoin with the proceeds from those convertible bonds. And then they continued to do it. And so MSTR has now grown into having tens of billions of dollars worth of Bitcoin. They're one of the largest Bitcoin holders in the world. I believe it's 600,000 Bitcoin that they currently have. So then I think that the question that everyone on Wall Street and in the community had was, okay, this has been very successful for Saylor and for MSTR, but can other companies do the same thing? And so we saw Metaplanet take the kind of the similar approach, had huge results from that. And when I think about it from first principles, I don't really see why other companies can't do the same thing.
If a big company comes into Bitcoin and they're having a plan to execute, a 5-year plan, a 10-year plan to execute and accumulate Bitcoin, they are not suddenly stopping just because the price goes up or down. Like they are just executing their plan that they have. But then when you look back at like 2012, 11, 13, 14, there weren't that many companies involved in Bitcoin at all. And most of them were like more retail folks that had panic if Bitcoin goes up, hugely up or down panic, like fear of missing out, or like oh shit, I have to sell some to make some profits and diversify and all of that. And so it's really interesting to look at how Bitcoin is kind of different now, what kind of a different beast it is now. So I think it's just a matter of time till the 4-year cycle breaks, even if it doesn't do it now, like most likely does it 4 years later. So I'm really, like, I have a hard time believing that 2026 will be a down year. Like I couldn't believe, like I couldn't figure out, like, if you think about what needs to happen for 2026 to be a down year, there's no bad news currently in Bitcoin. Like everything is just like, it's so boring. There's so less bad news that we are fighting above some relay policy.
Yeah, I agree. I mean, I think that we'll probably end up 26, between 200 and 250 thousand per Bitcoin. And I think that when we look at the cycles, people complained always that Bitcoin's too volatile, right? That was like the big complaint about Bitcoin. And Wall Street actually figured out how to monetize that volatility. And so when you look at the amount of options activity on IBIT, on MSTR, even on spot Bitcoin, right? And then futures, CME futures on Bitcoin, there's a massive, massive layer of derivatives that are trading on top of Bitcoin. And I actually think those are countercyclical. And so when Bitcoin's going up, they mechanically cause a lot of selling. And then when Bitcoin's going down, they mechanically cause a lot of buying, just due to the kind of natural hedging activities relating to this world of derivatives. And so I think that's what puts a lot of dampening on the upside. So I don't think that we'll see a parabolic top like we saw in 2017 or something like that. But it also, on the downside, does help cushion kind of the downdrafts where I don't think we're going to see a negative 80% pullback. So there's that. And then there's the passive ETF flows. So the launch of the ETFs was the most successful launch of any ETF product ever. And BlackRock now earns a lot of money from their Bitcoin ETF fees. It's a material amount of revenue for them. And I still think we're very early there in the sense that a lot of financial advisors and brokerages still don't offer access to the ETF. So step one is just allowing clients to buy it if they want to buy it. And then step two is when we really move the needle of saying advisors suggesting to clients, you should have 2 to 5% of your portfolio in IBIT or in some kind of Bitcoin ETF or spot Bitcoin, right? And so when you start getting those recommendations, that's when we'll start seeing massive passive capital inflows into Bitcoin.
Speaking with African Bitcoiners, speaking with Indian Bitcoiners, Australian Bitcoiners, American Bitcoiners, opened my eyes a lot to the use cases of Bitcoin outside of, like number goes up, where you have situations where someone, only because Bitcoin exists, can break out of a very bad situation. And we had like multiple of those cases. But then also just today, like just the episode before that, I did with Rick. Rick famously lost 25 Bitcoin because he stored his seed phrase online. And so he did self-custody, but he lost it. So it is always this interesting argument of with great power comes great responsibility. And there are 100% people better off that might just like have an Bitcoin ETF that say like, oh, I don't trust my own technical skills enough, and then I want to outsource that, which is fine. I'm just always concerned that more people have to take self-custody and running their own node and like doing the defensive part. And I think there's like a lot of people, like there's a strong core, no pun intended, a strong core people that actually defend the network and really make sure that Bitcoin is always protected. There's a lot of people that really care about the freedom aspect, very much so.
Yeah, and look, at the end of the day, I like to point out that all the Bitcoin are self-custodied, right? So Coinbase like holds its own keys, and that they run their own node too. They have to, and so I don't think that there's like a threshold question. I think that my biggest concern would be if Coinbase or other custodians started lobbying the government against self-custody, right? And saying, oh, there needs to be more KYC AML and you shouldn't be able to hold your own keys. That would be a problem. The reality is that I see them lobbying for the opposite. And so firsthand, right? It's not like they're doing one thing in public and doing another thing in private. Like I think they've been very consistent about having that ethos of being friendly towards self-custody. And they actually have Coinbase Wallet, which is a self-custody product. Now, it's Ethereum centric, blah, blah, blah. I get that. But look, it's actually interesting that self-custody is even more important for the DeFi Ethereum entrepreneurs and ecosystem in some ways than the Bitcoin ecosystem when it comes to public policy. So a lot of the debates in public policy are not about should you be able to hold your own Bitcoin? They're about should you be able to hold your own derivatives contracts on a DeFi exchange that is outside of CFTC jurisdiction? I think that's the big question mark, is what will happen for the dollar. Ideally, they would set up a strategic Bitcoin reserve to be able to back the dollar. So print dollars to buy Bitcoin until every dollar is backed by Bitcoin. And we essentially get back onto what we had, the gold standard, right? Get back onto the Bitcoin standard, and have a sustainable monetary and fiscal future.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.